Computer. Larry, how are you doing? It's a beautiful day in the neighborhood, and Tesla's slightly up today, so that wasn't too bad.
Randy, I have to tell you, it is so hot in North Carolina. Haven't been out for like 3 days.
Oh, I see.
Went out to have dinner with my neighbor last night. Just crossing the driveway it was so painful. I went out to dinner the previous night, just getting out of the car and walking those few meters. It's really bad. It's really,
Yeah.
really bad. We're suffering.
Well, I don't know. Of course, you guys have this combination thing going of heat and humidity, because I'm pretty sure we probably got you beat on the heat side. We'll be 103, 104 tomorrow, 105 the next day, something like
But
that.
the real feel is probably 103, 104.
Yeah.
Our real feel is in the 110s.
Right. Exactly.
And the thing about it is the humidity is so debilitating. The
Oh,
heat is,
yeah.
one thing, but the humidity is like your whole body. Anyway,
Yeah.
not pleasant.
Well, talking about numbers, the stock ran up right up almost to 260 and then got rebuffed. And I'm noticing that Tesla is completely disconnected from the equity market right now. It just has the equities could be going one way, Tesla's going a completely different way. There's
There's a
lots and
lot,
lots of numbers, huge numbers of being traded. The shorts were out last week. I don't know if I guess they're still fairly high. Well, what do you think? Are we going to take another run at 260 this week?
Well, the definitive answer is we could, and maybe we won't. That's fairly definitive.
What's your
Um,
gut, Larry? We know that you like to, I know you don't play short, usually the short market very, I mean, you don't normally get involved in the short term, but I know you probably still play or look at it and think about it.
I do look at it. I think about it in terms of market dynamics.
Yeah,
Who's holding, who's
yeah,
selling, who's
yeah,
buying.
yeah.
You know, um, it, it's really hard to tell. I saw a post recently by a fairly respected investor saying it's all the retail market. And then I looked at it carefully, and these volumes are not retail market volumes. I don't think there's enough free cash
Yeah.
in the retail volume pockets to be able to buy this kind of, and the volumes are so large, it's extremely seldom that you get this level of volume. I mean, 100 million shares at $250 a share is like, I mean,
Real money.
it's getting into real money. So I think there's a lot of playing about and balancing portfolios and when I say balancing portfolios, I mean balancing the short side with the long side.
Yeah, yeah.
It'd be interesting, to see the 13 EVs, but you know, right now there's a reevaluation of Tesla going on. People are finally beginning to believe the story. And it's not one story, there are
Right.
multiple stories. So it depends on which story you want to pick. But there's 88 is just around the corner. A lot turns on which Elon Musk turns up at the shareholder meeting.
Yeah, yeah.
Is he the guy who's dismissive of the institutional investors, will not answer their questions, doesn't give them, the kind of story that they're interested in hearing? Or is he the Elon Musk who turned up at the last shareholders meeting, engaged, um, helpful, interested in hearing from people and interested in speaking to people? That Elon Musk can move the stock another 10, 20, 30 points just like that,
Yeah.
if he turns up at the meeting. So from a short-term point of view, that is an interesting possibility. And then it depends on what the plan is for 88. If it's speaking to engineers, and a lot of engineering speak and focuses on the future, blah, 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 it's not going to be too good for the stock. If, on the other hand, it focuses on product releases, dates, deliver by, and focuses on a business plan that is halfway credible to the institutional buyer, then that's good for another 20, 30, 40, 50 points, because if the earnings call reinforces the story and then that story gets told in sufficiently concrete terms, it could turn the stock on a dime. Well, it doesn't have to turn. It can accelerate the stock. Mm-hmm. So those are the two, those are a couple of the futures that there could be. It doesn't make a lot of difference to me. I think I may add to my Leaps holding in the next couple of weeks, not to my core Tesla holding, but to my Leaps holding, simply because I think 2026, there's such certainty in my mind on 2026. It almost feels like it would be a mistake not to do that.
Yeah.
Although I've forsworn from, doing options in the last year or so.
But you're right. I mean, I think I'm going to continue to lay claim to the fact that I was the first one to do a YouTube video on 2026 back last, I think it was February or March. You and I have talked about 2026 a dozen times.
Yeah.
I agree with you. It's just like everything will be in place by 2026.
Yeah.
And there may be new things we don't even know about.
There will be.
Let me zero in on something that Elon said, because I pay attention. This is what I've always done. I pay attention to his exact words.
Yeah.
And then what if he says it twice or 3 times or 4 times? So if he does that, I have to believe that he really wants everybody to understand that this is what's important, because he says all. He doesn't say most. And I think he's being hyperbolic there. All that matters is improving Tesla self-driving such that miles between interventions is much greater than human. And he repeated that and repeated it. And people are like, well, yeah, but what about comfort? Oh, yeah, what about this? What about that? And he just keeps repeating it. What do you take away from that, Larry? What did that hit you the same way it did me as, oh, okay, we need to pay attention to what Elon's saying here?
He never says things lightly. He sometimes says things in jest.
Right.
But it's very clear when he's talking in jest, but he's not talking in jest. I think this is their measure of when, the physical robotaxi will be whether the actual business model will be
ready, yeah.
Operable.
Right.
Operable.
Mm-hmm. Yeah.
I think we're still a ways away from that point. I mean, I've spent a little bit of time looking at the videos, and I understand that there's still quite a bit of work to be done around the lanes. That's the last great, challenge. I know lanes are the single biggest reason I can't, without intervention, get out of my neighborhood.
Okay.
I had 6 exits from my neighborhood, 6 possible exits from it. It's a fairly large neighborhood, and it's difficult to get out. But it used to be when the first early versions rolled out in version 10, I couldn't get out of any one of the 6. And one by one, they solved each one, and each one they solved with an increasing degree of comfort. Mm-hmm. I still have one lane that just disappears. It just suddenly ends in a dead end. I mean, you'd have to drive into the forest if you didn't stop. And without any marking or warning.
Yeah. Yeah.
I can't get out of that. And it had solved that earlier. And there may be some setting that I need to perfect to get it to go there. But that's a big deal. lane management is a big deal. You know, watching some of the early drives now, I realize that there are some issues with lane management across many different scenarios.
Yeah.
So I think they've got that to solve. I'm really interested to see how it does on the highway now that it's a single stack. I don't know if the version 3.6 I have in my X is yet there. I don't think so. I think it's version 4 only. But, you know, I still see 2026 as the release date for, quote, Robotaxi, unquote.
Okay. All right. You said maybe late 2025. I think I heard
yeah,
you.
Yeah. Late 2025, early 2026. It's mag nicht, you know, it's 6 of one and half a dozen of the other.
Yeah. All right. So you've been very passionate lately, and you've been on, I don't know, you've either been on the show or talked about on shows about your energy bookkeeping analysis. And what I want to do right now is I want to give you what I think that you're accused of saying by Matt Smith over at Rebellionaire. He was on Farzi's show earlier today. And you and I have talked many times about the fact that there's unrealized sales and profits for megapacks. So this audience won't be surprised.
Say that again.
Unrealized, unrecognized sales and profits from the megapacks.
I think it's a little bit more subtle than that, but go ahead.
That's what I wanted to do. Okay. So what we talked about before is just kind of in the most gross form. We looked at some details earlier, but I think you have found something new, which is what I want to see if I got it right, and then I'll let you talk. So we know that there's apparently multiple points on these contracts, and the contracts could all be different, but the contracts might follow something along this line, that there would be some kind of recognition of revenues at installation, another recognition of
contracts would not provide for recognition. Contracts would provide for commitment by the customer to Tesla for that amount. So recognition is
bookkeeper
is a bookkeeping term.
Recognizes at that point. So there will be installation, maybe followed by when it's energized, and you can start making some recognition, finding what the capabilities are of the equipment, make sure it's correct. And then number 3, hooked up and operational. Number 4, performance criteria met. And then number 5, future year warranties. Would that be kind of the idea?
Yeah. And let's just deal with 4 and 5.
Okay.
Because 1 through 3 is very simple. Standard contracts. You deliver that benchmark, that milestone, we pay you this amount of money.
Okay.
And depending on how the contract is worded, you can either recognize it at the time of the milestone when you meet it, or sometimes only when the contract is complete and all the milestones can be brought to book. Otherwise, it's work in progress. That's very conventional. It's the same as if you're building a house, whether you're manufacturing a megapack or you're making a machine for delivery.
Right.
It's the performance clause, and then there's a warranty, and that warranty gets a certain payment every year that it's fulfilled, and that payment gets recognized as and when the warranty as and when that part of the warranty is fulfilled.
Right.
That's a small amount, and there is that. So there is progress payments based upon contract, which are recognized as work, which fall into work in progress as the work is done. So the actual cost of that work, and this is 1 through 3, the actual cost of that work moves from inventory and labor into work in progress.
Right.
And there's no profit realized on that at all.
Right. So if we we say that the product is going to cost $100, and that these 5 things are divided up 20% each, that when we install it, we might get 20% recognition, or The customer might agree that they owe 20%. When it gets energized, they might say, we give you another 20%. Hooked up and operational, we give you another 20%. Performance criteria met, etc. But that on the
performance criteria met is different.
Okay, well, so what I'm going to say though, let's see if I got this right. On those first three, there may be some actual cost of goods, whether that's raw materials or labor or overhead, whatever. There's some cost of goods factor in each of those first three. And
yeah, and you only recognize the cost of goods as inventory when you have it on in your floor, right? And you recognize it as work in progress when it goes to the customer's floor.
Right. And then when they sign off on it and they say they're ready to be billed, now you realize both from a bookkeeping standpoint. You realize the revenue, you realize the cost of goods, and you realize therefore the net profit for that person.
Yeah, well, you take the cost of goods off the selling price, and it comes off your balance sheet, goes in, and it's very straightforward. It's just like selling. It's like selling a car. You own it in inventory. When you sell it, it goes out of your inventory, goes to sales, and your sales, you recognize your profit, and you get your money back for your car. Same thing.
It's just that this is installments, like you said, a house would be.
It's in components that are delivered.
Right. Okay. So then
there's a service contract. You get services with that.
Right.
And that service contract may be for 5 years, and there's some money paid every year for the services. As you do those services and you get paid, so you will recognize that revenue, and your cost of services go in as a cost against that.
Right.
So that's number 4.
Okay. And then we have the performance criteria, which you realized apparently all of a sudden that's a completely different ball game.
Absolutely different.
Okay. So tell me about
that. May be 10 or 20% of the contract.
Right.
And the customer says, listen, you say I'm going to get 2 megawatt hours out of this thing. What happens if I only get 1.4 megawatt hours out of this thing after 3 months or after 6 months? Because I can measure before I sign the acceptance. I can measure it. I can charge it up, see if I get 2 megawatt hours. If I do, I sign off on it and I get paid, and I pay.
Right.
And you recognize the income, you recognize the sale, you transfer the work in progress, it's all done. But how do I know that it'll stabilize the grid within such and such a period of time, X microseconds?
Right.
How do I know that it'll deliver me, 2 megawatt hours in a year's time?
Right.
How do I know that it'll take X number of hours to charge? And how do I know it will not discharge itself in X number of days? There may be other criteria that I'm not familiar with.
Yes, right. Okay, yes.
There's a list of them. And they're subject to a time. They're probably, this degradation after a year, this degradation after 5 years, this degradation after 10, whatever it is. Those are performance obligations. I say, this is what this thing will do for you. And you say, show me. And the show me is, I'll pay you when they actually achieve those goals.
Right.
I don't bill that. I don't recognize that in income. And it's got nothing on it's not on my balance sheet because there's no parts that I've bought and handed over to a customer in order to get it.
Right.
When and if it transpires that I'm paid for it, at that point, I recognize it as income and I bring it to the book.
Right.
And it falls to profit, directly to profit. Don't pass go, don't go to jail. It goes straight to the bottom line.
100% to profit. Yeah.
Yeah. 100% to profit. And to the extent that the performance obligation is not met and I don't get paid, it's not a cost to me. It just reduces that potential profit. Yeah. So right now there's $3.8 billion on a note, not on the balance sheet, but on a note that says I have customers that have performance obligations to me. If I meet that performance, they have to pay me that $3.8 billion. And of that $3.8 billion, I'm going to earn I anticipate getting $1 billion of that in the coming 12 months.
Now, Larry, and now let me, before we get to the next step,
Okay.
this is where I might be confused. That 3.8 billion, that wouldn't just be the performance criteria, the 100% profit performance criteria. Would that not also include that second step energized and that's third step hooked up?
Nothing to do with that.
Nothing to do with it.
Nothing at all
It's
to do with it.
100% the performance criteria.
Yeah.
Okay.
Performance criteria is exactly that. I mean, what you're saying is that you think that that performance criteria is meeting the various stages of the game. I don't think so.
Okay. All right.
I mean,
even if it were, it would still be a portion of that 3.8 would be possibly its 25% margins, and a portion of it would be at 100% margins.
No, it would. If it were the kind of thing that you say it is, it would only be the margin that they earn in general. So it'll only be 25%
on a portion of it, but a portion of it would be number 4.
We don't know.
Okay. Yeah.
If performance obligation actually means delivery of the goods, that's like orders on hand. That's not. I've never heard that written as a performance obligation.
Are you saying that in the Q10, is it the Q10? That the Q10, it calls it a performance obligation?
That's what it calls it.
Oh, I didn't realize that.
I quote the thing in my... You don't read my posts. I quote the actual post. You want me to read the damn thing to you?
No, it's okay. All right. So that's how it's called.
There are 2 items mentioned in the note, and the note's very clear.
Okay.
The first item is work that has not yet been delivered. That's about $1 billion. The next item is performance obligations, and we expect to recognize
$1 billion.
$1 billion in the next 12 months.
And 3.
I don't know how many times I've explained this. People just don't read my posts. That's why I've become so aggressive in my posts, because I've got to hit them over the frigging head.
Well, this is a pretty complex accounting idea here, Larry. So, Larry, let me ask you a question. So now,
complex enough that the auditors seem to have made it complicated. I don't know why.
That too. So over next quarter, this number is just going to go up again. It's going to be higher.
It's gone up every month, every quarter for the last 3 quarters.
Yeah. So it's just going to keep going up. As they sell more, it'll keep.
No, it reaches a point that it stabilizes as long as once the factories stop expanding and reach a steady state, it'll reach a steady state over time, because the amount of obligations that are being paid for will be equal to the amount of obligations being incurred.
But if we continue to expand, you would always have this expanding amount.
If we continue to expand. And guess what? In 2022, the business plan was to get to 1 terawatt hour per annum,
right,
which is 80 gigawatt hours per month.
Right.
And, that's
a lot. That's a lot more than now. All right.
That is just to put that into perspective. When Shanghai is operational,
right,
the 2 factories will be capable of delivering 80 gigawatt hours per annum.
Right.
And Tesla is aiming, according to their 2022 business plan, aiming on 1 terawatt hour per annum,
right,
which is 12 times the 80 gigawatt hour.
Right.
Yeah. So just to put that into perspective,
exactly.
I think they'll get there because the demand is just through the roof.
Right. So the next question I have, Larry, which I haven't heard answered, and maybe you've put this in a post somewhere, but I didn't. If you did, I didn't see it. Is this $1 billion of expected realizable profit? This is pure profit. Is it on anybody's spreadsheet? Is it on your spreadsheet?
It's on my spreadsheets.
It's on your spreadsheet. Okay, you're figuring
the
number.
Look, I'll read you the actual boilerplate. I don't know if I should call it boilerplate. We record as deferred revenue any non-refundable amount that are collected from customers related to prepayments, which is recognized as revenue ratably over the respective customer contract term. This is item number 1. As of March 2024 and December 31, 2023, deferred revenue related to such customer payments amounted to 1.78 billion and 1.6 billion, respectively, mainly due to contract payment terms. Boom.
Okay.
And it also says revenue recognized from the deferred revenue balances as of December 31, 2023 and 2022 was 417 million and 230 million for the 3 months ended March 31, 2024 and 2023, respectively. Period. So that's the contractual payments which I get in advance,
right?
And as I deliver, I realize the payment as revenue, and I realize the work in progress as expense.
Exactly.
Then it goes on to say, as of March 31, 2024, total transaction price allocated to performance obligations that were unsatisfied or partially unsatisfied for contracts with an original expected length of more than 1 year was 3.86 billion. Of this amount, we expect to recognize 1 billion in the next 12 months and the rest over the remaining performance obligation period.
Right.
That same note had, instead of 3.86, it had 3.4 million in the previous in the previous 10Q.
So Larry, the question I'm asking now, though, is about your projections for second quarter, other people's projections for the full year. Are people including that billion, that free billion?
I am.
You are.
They're not.
Okay, they're not. Okay, so this could be a huge surprise to Wall Street as this is realized over the course of the year.
You know, if my interpretation is right.
Correct. Right.
But I tell you this, I did not have in my projection 9.2 gigawatt hours
yes, right.
of delivery this last quarter.
Right.
I had 2024 Q1. Where's my 2024 Q1? Maybe I've got the wrong card. Energy. Yeah, here it is. 2024, for the whole of 2024, I had 5.1. No, excuse me. Yeah, the whole of 2024, I had, where's my gigawatt hours? Here we go. Gigawatt hours projected in 2025, 14.7.
14.7. And 9.4 we got in 1 quarter.
Yeah, 9.4, 9.2.
No, I don't know. It seems
yeah,
like...
and so we've already had 10.2 gigawatt hours delivered of my projected 14 gigawatt hours.
Right.
Now, it could well be that this thing's so lumpy that we see very low deliveries in the next 2 quarters, but clearly we're going to beat my, my potential 15, what did I say, 14 gigawatt hours. I mean, it's as clear as day that we're going to beat that in terms of deliverables.
Excellent. All right. Well, that's kind of where I wanted to get, because I wanted to, I've heard it talked about a few times.
But I didn't hear Matt today, but in terms of my conversation with Matt, I had this argument with him. And on the call, I had the argument with him on a call, on a
Spaces?
YouTube.
Spaces or YouTube?
Yeah, on a YouTube debate. And he recognized my point of view and he agreed with me.
Yeah.
Whether he's changed his view or not, I don't know. I thought I
No,
would
I
have
think
heard.
he was. I think he was agreeing with you. No, absolutely.
Oh,
And
so that's why you were asking me the
well,
questions.
yeah, because I was still not understanding. I suppose I should have gone and read the Q10 myself, and maybe I would have. But I'm glad I did it this way because I think
The other thing I will add is that there are some who say, well, the revenue is going to go way down because battery prices have come way down.
Right.
But, I also posted a grid showing revenue, showing battery prices and revenue over the last 5 years. And there's no relationship between the megapack price and the battery price.
Interesting.
Now, megapack prices have halved in the advertised space.
Right.
But we probably got 2 years to go of deliverables before these prices start being delivered.
Right. Yeah. Yeah. So, okay, that covers the energy side of things.
Okay.
I did want to say that Gary Black called the Chancellery office this morning, talked to the assistant down there, and she confirmed that the judge will hold off on her decision on any remuneration to the plaintiffs and plaintiff's attorney until after she adjudicates the issues raised by the vote.
I have no idea why he made that call because we knew this.
Well, okay. So
I've said it like 5 times.
Okay.
And not because I say it must be so, but, we spoke to an attorney.
Yeah.
And he gave us the lay of the land, and it was very clear.
Oh, okay. All right, good. And she did confirm that while...
Oh, and by the way, Warren Redlich also confirmed it. So,
okay.
I've got this from multiple different professional sources.
Got it. And then she did confirm also, or the assistant confirmed that there is not a date set yet, but she's expecting to be late July or early August, which also just is confirming what I think we were expecting, but she confirmed there is not a date set yet for the oral arguments.
Yeah, there's no date set for the oral arguments, and there's no defined amount of period that she has to respond with a judgment. So she could delay this as long as she wished.
Oh, sure. Absolutely. All right, let's look at the general economy then. The consumer credit numbers came in this afternoon, and the auto side of the report was kind of, not that interesting. It was about what one might expect in comparison to the previous quarters, previous months. But the credit card side, which had been very low last month, shockingly low last month, it bounced back big. Revolving credit, like credit cards, jumped by 6.3% annual rate in May after the 0.8 fall last month. But even if you add those two together and you end up with something like 2.6 per month, 2.6 annualized rate, that would still be a very high increase. So people were wondering, would these consumers continue to, put stuff on credit?
Yeah.
I did see an article the other day, Larry, that asked, it was a poll that asked consumers whether they would be willing to go into debt to go do their summer vacations, and the a very large number. The person who wrote the article was shocked at the number of people who said they'd be willing to put their vacations on a credit card. And so this is one more indication to me of the consumer running out of cash. What do you say?
Yeah, it's also a bit worrisome that they're prepared to continue building credit at this rate.
Yeah.
I wouldn't have thought that it was still going to continue, but it's a bit troublesome.
Well, my favorite economics professor, Jeremy Siegel, was interviewed for Business Insider, and he said, they say, the rally in stocks and the strength of the economy is at risk if the Fed doesn't start cutting interest rates soon, according to Jeremy Siegel. The top economist who's been making the case for the Fed to loosen monetary policy for months pointed to more evidence of a weakening economy in an interview with CNBC on Thursday. GDP has slowed from its rapid pace of expansion in 2023, with the Atlanta Fed estimating 1.5% growth in the second quarter. The job market, while resilient, is also beginning to stumble. unemployment at 4.1. He then says more job losses have pushed the economy closer to triggering the highly accurate recession indicator known as the SAM rule. Didn't know
SAM rule's been focused on a lot the last month.
And if Jeremy Siegel is now saying he thinks it's a valid one, that's surprising to not surprising, but interesting to me that he's now noting it. So
I just dropped my chair for some reason.
Your chair completely collapsed and you went away.
Yeah, I got one of these fancy chairs. I pushed the wrong button. Sorry.
Anyway, the SAM rule, if I remember it correctly, says that if the unemployment rate goes up 0.5% over the course of 6 months, then that is an automatic. There's going to be a recession for sure. It has missed that by a month a couple of times now.
Well, it depends on the revision, right?
That also depends. Although they don't usually, I don't think they usually revise the unemployment rate. They revise the number of unemployed, but not the employment rate. I don't remember them ever doing that because that's a different survey.
It is, yeah.
Yeah,
right.
So I don't think they changed that. Anyway, so he says that indicator signals the start of a downturn. Oh, it's got it right here. It's a 3-month moving average of the unemployment rate goes up 0.5%. And right now it's sitting at 0.43. That's how close we are. So he says that combined with other recession warnings is creating a more convincing case that the Fed should dial back interest rates and stop slowing the money supply. Oh, he also mentions the yield curve inversion. We are in a slowing economy, Siegel said. I think it's really time for Chairman Powell to tee up at the July meeting and then cut in September. So he's saying maybe even tomorrow he could start being a little soft, a little dovish. Maybe in July, tee up the idea that there might be one in September. So what do you think about all that?
Well, I read, I sort of caught up because I was behind, but I read that the huge government employment binge was really local government.
Oh, really? Interesting.
Which, I find puzzling in the extreme because that's a lot of people to hire in 1 month. Is it all California?
No, they're cutting the budget here.
Oh, because you're cutting the budget doesn't mean you don't employ people, by the way. And, local government can also be taking up the slack. Who knows? It is such a puzzle to me that in this economic climate, government should be employing that amount of people in 1 quarter. I mean, it's crazy.
Yeah, and not only that, there was just a note out today talking about the percentage of the increase in the job offerings that are out there right now is almost all government as well.
Jeez.
Yeah.
That's very puzzling. That's very concerning.
And they were pointing out that over on top of the 70,000 or whatever it was this quarter, they're talking about another 60,000 openings or something, an increase in another 60,000 job openings. So
you think with Chevron, there would be a massive layoff.
Yeah, right. And by the way, for those of you who have not been paying attention, Chevron is a case that Larry Goldberg was thrilled to have decided by the Supreme Court a couple of weeks ago because of one of his hobby horses.
Yeah, it takes away the power of these regulatory government bodies to actually pass what amounts to a law by creating these rules and then be the judge of that law when people are held to account under that law.
Right.
And when I read the Constitution, which was just the other day, actually, it didn't say anything about local governments or, regulatory bodies being empowered to make laws.
Or adjudicate laws.
And then I read about the courts, and it didn't say anything about courts being created by these local bodies. And then I read about being judged by, your peers. And it's just crazy where we've got to in this whole thing. It's crazy.
Yeah. Well, since I know you're passionate about that, Larry, before we look at where the markets are moving right now, is there anything else you're passionate about today that you want to pass on? I mean, there's always the possibility that I've missed something that you're just dying to tell us.
Yeah, I mean, I'm passionate about a lot of things, but people aren't interested in,
Oh, they are interested
in
there.
my opining my political views. I think
political.
we all spout off too much about our political views.
All right. Well, I was thinking more in terms of Tesla, or the stock market, or things like that.
Yeah, I am, puzzling over 8.8. Very excited about 8.8. I'm hearing snippets. I'm gleaning information. I'm just very excited about where we are right now. I've been excited about where we are for some time, and it's fascinating to see how the market turned, and so many of us predicted, I know you did, so many of us predicted this was going to happen. And like every time it happens with Tesla, it happens, completely unannounced, completely heralded, and it catches all these people off guard.
Right.
But, that's the joy of being invested in Tesla.
Well, let's see. When we started this, we were talking about the 160 level. I consider that to be a very heavy resistance level. It did get bounced off at 160 today. I believe it's going to test it again this week. And I'm not
talking about 260 or two.
I'm saying 260. Yeah, I'm sorry. I do that all the time. Yeah, 260. So I think it'll test it again this week, barring any weird news one way or the other. I think it'll test it again.
I think I had this conversation with you at the beginning of the year.
Yeah, but that was 300, I think. Anyway,
no, we were at 250. You were
250.
Talking about 300.
Right. Yep, yeah, 250. Yeah.
I mean, you're always going to be right. It's just your timing may be a little off.
That's right. That's right. So I'm going to be interested to see. I can't make up my mind, though, whether it breaks through now or whether it's going to have to wait till earnings before we actually make the run up to 300.
I mean, if I'm right in my numbers, I think we'll break through to 300 after earnings. If I'm wrong in my numbers and the numbers significantly below 60 cents, I think it's going to dwell at these levels or below for a little while.
Yep, I think we're in agreement for once. I mean, about that. We're in agreement on many other things.
Right.
So the Dow was down 31 today, the NASDAQ up 50, S&P up 5, and Tesla up $1.42, as I mentioned, after bouncing off of 259 and change, 259.44 or something. Backed off to 252.94. The Mag 7 were mostly down. Apple was up and NVIDIA was up, but the rest were down today, Larry. And Cathie Woods, completely mixed, half-half. The Cathie Woods, the ones that I follow. It's not anybody else's system but mine. So let's see here. Let's go ahead and take a look at how bonds.
Bitcoin's at 56K something.
I'm sorry?
Bitcoin is 56,000 and change.
Yeah. Well, somebody gifted me 10 Bitcoin the other day, Larry. So
really?
It's got to be going down now. Not 10 Bitcoin. I'm sorry. $10 in Bitcoin. In Bitcoin.
10 Bitcoins over $500,000.
Yes. So $10 worth of Bitcoin. So you can count on Bitcoin going down now.
So I think Bitcoin's a buy, actually.
It might be at these levels, just on a technical level, because I don't understand the fundamentals. They keep on the guy who bought me the $10 worth. He also sent me this book, The Bitcoin Standard. I think he's trying to get me into Bitcoin. I don't know what's going on. 10-year up but 1.2 today. The 2-year, I'm sorry, that's in the pre-market. Sitting at 4.279, so above my break even, 4.25. And the 2-year up 1 basis point in the pre-market also. So still sitting right around that 33 basis point difference. So we haven't broken through that. I think breaking through that 30 might be the real key, because it's come down to this 30 level before, and then it went back up. And now it's back down to that right around 30 basis points. The 2-month is actually down 0.9 of a basis point. But that's still way over 100 basis points, about 110
Right.
basis points. Interesting. Oil. So Larry, today, people were telling me that oil was down because there was a hurricane in the oil fields. That was a headline, Larry.
How does that compute? I mean, you have to be in nursery school for that to mean anything to you. I mean, come on.
So,
supply, demand. I mean,
anyway, so but in the pre-market right now, oil is down. I'm sorry, Texas Intermediate down 0.09, sitting at 82.24. So now softening, definitely softening, going back towards 80. And Brent still 85.75, but it was about 88 the other day, 87 some change. And natural gas up 0.30 in the pre-market at 237. So that is, I would call that the middle of the range.
Yeah. How did gold do today?
Gold up $4.70. So it's still sitting toward the high end of its recent range. I joke that it's always at 2,333. But right now it's at 2,368. So that's up.
Yeah, the war in Ukraine is hotting up quite remarkably. And, the situation in Europe politically is getting really muddy.
Boy, okay.
And so I think that could have a real impact on gold.
I skipped over one of the paragraphs of what Siegel was saying, and he also mentioned that one of the things we can look at in the next 60, 90 days is going to be uncertainty in the politics in Europe, uncertainty in the politics in the United States, especially with the situation with the president. So that could be, and there are a couple of other people. I've seen a couple of headlines now agreeing with me that we're really due for this 10% fallback of just 10% on the equities taking off some of the froth.
May not be a bad thing.
Well, yeah, is that true? Copper down 0.2% in the pre-market, sitting at 416. Remember, it was as high as about 510. And you mentioned
that means that industrial activity is down significantly.
Yeah, I think that's right. Well, since you and I talked, I think maybe not. The last shoe is starting to drop. Services was the last shoe.
I know you said that last time we spoke.
Okay, we talked about that on
Friday.
Yeah, so we'll see what happens because really the last shoe. Everything else is already in recession. Government, of course. So anyway, you mentioned that the Bitcoin down 412 overall for the day at 56.6. It was as low. I think the low was around 55.5, something like that.
Well, the low was way down. We got down to 30,000, but in recent
recently,
times.
yeah, recently,
yeah, since the halving.
Okay, and then we have the dollar recovering a little bit today, and equities for the pre-market. Dow up 53 or 0.13, S&P up 11 or 0.20, NASDAQ up 67 or 0.32. So indication of a positive day tomorrow. We got the Fed chairman speaking tomorrow. What are you expecting, if anything? Anything, not speaking, actually being castigated and chastised and run over the coals by the Congress?
I mean, I really hope that he indicates that he's turning the corner. Doesn't have to say I'm turning the corner, but he has to say I'm thinking about, we're thinking about, how to meet the challenges, the short-term challenges, which we think to be to the downside. Something, well, maybe that's a little bit too strong, but something soft but clear.
Yeah,
that he's thinking about the downside, because if he's not thinking about the downside, then he's crazy.
Yeah, there you go. Well, and maybe that's the whole problem. Well, Larry, I do want to mention to everybody that's watching that there was a outstanding video earlier today with Larry White that people might want to take a look at. I'll put a card right up here. And then, yeah, I think that's the everything we need.
Harry White?
Did I say Larry White?
Yeah.
Boy, oh boy. I have been at this a long time today, Larry Goldberg. Brian White had a video with me earlier today.
Thank you.
That everybody should see. It was excellent. It's right here.
Well, last week a video that I did was plugged as a video with Brian White. So
I did that?
Not you.
Somebody else. Okay. So, well, you know, a lot of us are getting old.
I think I'm the dean of everybody.
I think you might be, but that's okay. All right, Larry, thanks as always for coming on. And to all of you out there, it's been great talking to you.